Hey, Mike Swanson here. This morning I'm going over my portfolio and looking at my investments and what I've done over the past month, and I thought I'd share it with you. Anyway, this is the open portfolio that you see on Google. This is my Google Finance account where I'm keeping track of it. I can quickly log on to this anytime I want to and see it. And below this video, there's spreadsheets where you can download this and see all my positions I got right now, and you can see all the transactions I've made since I started this the beginning of August. And as you can see, most of the positions are in the green. My account's got a really nice gain in it right now that I've generated this month in August, but 1, 2, 3, 4 of the positions have small losses on them at the moment. But honestly, I'm not worried about that. That's to be expected when you have a bunch of positions, and the thing is to evaluate every single position on a periodic basis and then decide if you need to get rid of anything. And right now, the positions that I have these small losses on, I'm not very worried about them because I think they're going to go up anyway. I think, we saw gold and commodities break out in August and have great gains this past Friday, and the European markets, I think, are going to follow suit. In positions, Turkey is one of the ones I have a loss on. I think that's going to go up and do fine. In Russia, I've got to own a Russia ETF, and I think that also will end up doing fine also. And GNT is a fund linked to commodities, which I think is, it's down. I'm down $70 on it, and I don't think that's any problem. TNK is a shipping stock, and actually, even though that's down, the position's down, I actually got a dividend payment in August for owning it. So I think I actually made money owning the position than actually losing it, even though it's down in the account right here. But anyway, what I want to show you is this account overview document that I was able to get from my broker, and it evaluates the account, and we can look at it in really great detail exactly what's happened in the month of August. And I started with $207,000 in net asset value, ended with $215,000 for a return of 3.58% for that month. And at one point, I do think I actually made it a positive of cash in the month, but that return is all from the positions that I've owned. And you can see right here the cumulative return, what happened. I bought some stuff very beginning of the month, and actually it dipped down. I was actually at a loss for a few days, and then it came back up. Around the 16th, I bought more positions and added on to the point where I was actually more than fully invested. I'm on a slight bit of margin here, and for 1, 2, 3, 4, 5 days, most of the gains I made that month actually went away as we saw a dip in commodities and in European markets and so forth. Then on Friday, it was an explosion. I gained 2.2% on that one single day in my whole account because gold and commodities broke out, and we saw great surges in them. You can see the net asset value, how it dipped a little bit, and then the last day there was a nice surge. And right now, you can see right here, I'm more than 100% invested in my account. I'm $25,000 on borrowed money. We'll talk about that in a little bit. But I want to show you this. This is the summary of my positions. And you can see that I've got a bunch of positions. This right here divides it up into here's VIP, which actually now makes up over 9% of my account because it had it's up, quite a bit from where I got in. That position is up 18%. But you can see that I really haven't put a whole lot of money in any single position. I'm pretty well diversified. As I entered these positions, none of them made up more than 9% of an initial starting capital. And the Greece ETF that I bought is actually only 4% of my money, or 4% of my overall position right now. And I'm pretty well diversified. It's a mix of telecommunication stocks, mining stocks, and some financials. The AI is a financial position, and European ETFs. In that tanking stock, TK Tankers, right? So I'm pretty diversified, not only in the amount of money that's in any single position, but I'm in different European ETFs that are invested in different European markets, telecom stocks in Europe, VIP and FTE, and also mining companies. And GNT, which is a well-diversified commodity ETF with a concentration in mining, and also the GCC commodity ETF, which is divided equally in a basket of commodities. Now here's the asset allocation day by day, and I start out purely in cash, and I took an investment, got up to $30,000 invested on this account, and then you can see on the 16th of the month I pretty much finished off my investing and went into a little bit of margin here. Not a whole lot, just a little bit. And I'm looking over things today. I'm looking at what I've done in August, and after I make this video, I'm going to look through the charts, and I'm going to consider over the weekend, do I want to buy anything else, or maybe even sell stuff to move it into something else, although that I'm pretty much happy with what I got, but I'm really going to think about that. So this shows you day by day what I did, how I was allocating. Here's another allocation by sector, and you can see telecommunications, what it's made up, financials, industries, industrials, and basic materials, which is basically mining here, and unclassified, which is where they're putting some of the ETFs I bought. Now this is a neat little chart because it shows you the percent return day by day that my account did, and you can see there's some negative days here, right? And for the most part, none of them were down. Were here. My account on the 30th, on Thursday last week, was down over 1% for that day, but then the next day I gained over 2%. Now this is pretty much, this isn't a very volatile return day by day for my account last month at all, which is kind of unusual. I wouldn't expect that going forward, especially if I buy more, which I'm actually considering and thinking about over the weekend. If I buy more and go on more margin, I'm likely to have days where I'm down more than 1%, down even 2%, and days more like this if I'm positioned correctly where the account gains a whole lot. But the bottom line is, you can see day by day here, I wasn't really getting huge volatile swings in my account. The worst return on any single day was 1.04%. The best return, again, was the very last day of the month, where I made 2.2%, thanks to a big gain in gold and gold-related investments. Now here's my account compared to the rest of the stock market, and you can see the returns pretty closely are mimicking the stock market. I'm purple, and the other lines here, the Dow and S&P 500 and the NASDAQ, but the last day of the month I broke away from the rest of the market averages, and that happened because I'm invested in mining stocks, and they just did so well that day. Now the European stuff didn't go up huge on the last day of the month, but mining did. So if you've got a portion of your account invested in sectors that are doing really well and really outperforming the market, that's how you beat the stock market, right? And that's what happened to me on Friday. So it's kind of neat to look at this. And here's the cumulative return, again, that you can see in great detail, where I was actually down to start, right? I made some investments and I was in the red for 2 days, but then we came back and went back up. But then again, I lost most of the return here in 1 week, and then bam, one day, did so good there. And here's showing you the cumulative return again compared with the rest of the stock market. And here's what's interesting is I was lagging the market there, right, for most of the month, and then we got ahead of the market the 22nd, then we had a sharp dip as we dipped at the stock market, and bam, we caught back up on the last day. Now, I'm going to tell you something about that. People really like to watch their account and compare it to the market, and if you're managing money, you've got to do that because that's what your investors expect. And if you're running like a hedge fund and you've got other hedge funds investing with you and institutions, they demand that you beat the market every single month. And if you don't, they're going to pull your money out and put it somewhere else. So people are really obsessed with looking at that. But personally, this is my money. This is my account. No one's taking my money away from me if I don't beat the market. I don't have these hedge funds breathing on my neck. I'm not really worried about that because I have faith that I'm positioned in the right stuff. And I think right now gold and commodities breaking out into brand new bull markets, and I think that's going to beat the market for the next year or two or three. And the European stuff I've invested in, European markets as a whole have not yet broken out, but I think they're going to break out in September just as we saw gold stocks do and commodities do. So I think even though day by day, I wasn't beating the market in August, I don't expect to do that in September, but over the next year, over the next 2 years, over the next 3 years, I think I'm positioned right now where I could just cut everything off and I'll be beating the market over time. And that's what I have faith in, that I've invested correctly for the next couple years. But that's why I'm not worried about what happens day by day. But if I was managing money, people wouldn't have faith in that, because they're obsessed with day by day what happens in the market, month by month. But even though we did good last month, I'm not thinking that way. I look at this to analyze things, and right now I'm kind of looking at it in satisfaction. But my goal for September, I'm considering buying some more positions to start the month out, and at the end of September I'm going to go through things just like I'm showing you now and see, am I correct about gold? Because if I'm correct about gold and commodities, they should do well in September, right? And I think Europe should break out. So that's what I want to be positioned for, and I want to look back, not day by day by day by day, hour by hour, watching the TV and thinking, oh, the Dow's up, the Dow's down, I'm doing this. I'm not going to think like that, right? I'm going to look at the end of September and do another video like this, and we're going to see, am I correct about commodities? Are commodities truly entering a new bull market? If they are, they should be higher at the end of September. And then we're going to see, are European markets breaking out too? Those are the key questions I'm going to be looking to see answers for at the end of this month. Not, are we up today, down today, whatever. And these are statistics too, that risk analysis, this is just as important as the return you saw, okay? Because the maximum drawdown we had was a 2.32%, which is, to me, that's great, right? The Sharpe ratio I had for August was 4, which is basically phenomenal. 1 is pretty damn incredible, but 4 is, you can do a Google search and look that up. But that's stuff that's basically factoring in the return you generated and looking at the risk you took. And I expect that Sharpe ratio could drop if I go on margin and we have a week or two where stuff pulls back, because that could easily happen. If I added my positions at the start of this month, we could see a pullback, right? Even if I'm correct about the commodities doing well, because commodities had such a great day on Friday that they could pull back at the beginning of this week, or we should see some short-term profit taking sometime in September, and we could get a drawdown bigger than 2% because of the way I'm buying more as things happen here. And here's the comparison, right? My Sharpe ratio was 4, the S&P and stuff's like 2.89. My drawdown was bigger than the broad market there, okay? But my return overall was better. So that's showing you this neat report that I can generate from my broker, and you can see in detail how, analyze this stuff and see how we're invested here and pretty well diversified in lots of different positions. Not one single position is, one of these positions can go to 0 and it's not devastating. And here we are with I use this Google thing so I can quickly load this up and keep track of stuff, and you can download the spreadsheet and look at this yourself. But here's the positions. How many SDS? I don't own that anymore. That's something I got out of. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 positions right now. Basically my account is worth $215,000, and I've invested $230,000. So I'm on margin for like almost 10% of my account, and I'm considering adding to that. My goal right now, I want to be invested in commodities and in European stocks, and I want to be invested in stuff paying dividends. That's my goal, because I think that going forward is where the money to be made is. So I'm going to stop this video. I'm looking at things. We got a nice long weekend to think about what we're doing, and I'm going to ask myself, do I want to buy more? All right. Now, if I do, that means using more margin. That means taking on greater risk. But you've got to understand that the $200,000 I have in this account is just part of my overall net worth. Okay. And I plan on making more deposits in this account over the next 6 months, to the point where I could buy $300,000 worth of stuff, or even $350,000 worth of stuff, and be like 130, 150% invested, and 6 months from now not be on margin anymore, thanks to deposits I expect to be able to make over the next 6 months. So that's what I'm considering. And actually, if I do go on margin or more, I'll do a video talking about the right way and wrong way to use margin in account, because I look at it as a tool that, if used correctly, you can generate big returns. But if you use margin wrong, man, it can result in some real devastating losses. And it doesn't just take borrowing money to do it. You can use these ultra ETFs and be heavily margined up and taking big risks in the market that can generate big returns or giant losses. And a lot of people, these margin ETFs, like SDS is an ultra short ETF, right? And SSO is an ultra long ETF, where if you're in that, you can make twice the return of the S&P 500 or make twice the loss. And there's now triple ETFs. I've never bought one of those, but they're out there, and I know lots of people that trade the markets like to use those things, and they're taking on big risks, just as I would be taking on a big risk if I add on and use margin here. So even if you're not using margin on money, right, borrowing money to make more return, if you're using those ultra ETFs, you're doing the same sort of thing. In fact, I think they're actually more risky because they have a time decay factor to them. And look that up on Google if you're interested in, or play those things, because that's a big thing you have to put in consideration. The bottom line when it comes to margin is that I don't think you can invest with margin for years and years and years, but it's a useful tool, a trading tool, and one I'm actually considering about over the weekend. So anyway, I've kind of shown you this stuff. You've seen my account. You know this is all real. You've seen the brokerage statement. It's not just some stuff I'm typing in on Google Finance. This is real stuff going on. And one thing I didn't talk about is the dividend payments, right? Because I got 2 nice dividend payments this in August. One from G&T, made it 14 cents per share off that, and then TNK, I made 11 cents per share. So you can see I made over $490 off this TNK stock position, and $133. So I made over $500, close to $600 in dividends off just 2 positions. And almost, I think every single position I own pays one dividend or another. They don't pay every single month, but VIP pays like close to 20%, FT over 10%, and on and on. Every position I've got so far is paying a dividend, and that's important to me. And Some of them pay just twice a year, especially ETFs. So December, man, is going to be a big dividend payment month for me if I keep all these positions, and that's makes a big difference in the long run. These positions I got, if they just sat there and didn't move at all, I would be making a good return for the year. So anyway, I like talking to you about this stuff, and I enjoy it. It makes me keep talking and talking and talking. So I got to cut this off, and you'll be hearing more from me this week, and more stuff to come. So enjoy this Labor Day weekend, and have, I'm going to cook out some friends of mine and have a good time. You do the same. Talk to you later.